What if the next global reserve asset isn't gold or the dollar, but Bitcoin? From extreme volatility to governments secretly preparing to hold it in their treasuries, Jeff Park reveals the future no one is ready for.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Jeff Park begins with one of Bitcoin's most misunderstood characteristics: volatility. Traditionally, volatility is measured using the standard deviation of daily price movements over a 30-day period. That's what Wall Street traders are used to. But Park reminds us that volatility isn't just about day-to-day swings. Sometimes the biggest risk isn't steady choppiness, but sudden extreme events, what he calls jump risk. For Bitcoin, these fat tail events, the rare but massive upswings or crashes, will probably always be part of its DNA. Why? Because Bitcoin behaves more like a commodity than a traditional equity.
I think over time, what we'll see is that the general range of Bitcoin's volatility is probably going to be more constrained, meaning that the fat tail events are probably less likely day to day. At the same time, I don't think it means that they'll go away, which is the reality that volatility can be measured in a lot of different ways. On one hand, the most classical definition is measuring the standard deviation over a 30-day rolling period, which shows you what a normal distribution of a stock movement could look like. But volatility can also mean something beyond that, to a second order effect of like a jump risk. So, having a volatile stock for the sake of daily volatility is different than something that's not volatile for a while and then one day moves 100%. That would also be called volatile. It just has a different quantitative characteristic to it. So my view is that Bitcoin will always have big tail risk both to the left and to the right of the curve, mainly because that's how commodities trade. This is the big win, of course, in Bitcoin being defined as a commodity and not a security. And in that sense, think about oil, for example. Oil is one of the most liquid commodities on Earth. And yet there are days when you wake up and oil prices jump dramatically and decline dramatically. That's just the nature of what it means to have a scarce asset where there can be supply shocks and otherwise deliverables that are possible. And Bitcoin is exactly the same thing. Bitcoin's been performing recently in the summer.
Why is that?
Usually the summer tends to be a pretty boring period for crypto. If you look at the studies of Bitcoin's outperformance, it tends to be in the Q4, Q1 timeframe. And the Q2 to Q3 timeframe is pretty lackluster. I do think there's some seasonality embedded in why Bitcoin behaves this way, but the truth is that this summer, it's been explosively dominated by crypto news. We just mentioned the stablecoin legislation having been an event during the summer in a way that really is somewhat historic.
Yeah.
And on top of that, this particular administration just has so much agenda to get through before the next election cycle would take away some of the news source. And so the urgency and the rush to get things done was really front-loaded into the summer. And I think that has created some upward movement for the stock and Bitcoin. But at the same time, we're at very low historic realized and implied volatility. Implied volatility and realized volatility are both kind of in the high 30s these days. Those are half of the Netflixes and the Nvidias of the world. It's actually sometimes been observed that gold had a higher volatility than Bitcoin in the past 2 months as well. So even though it's been muted, the price has either stayed consistent or kind of gone up in a range-bound way. And the reason it's surprising to me is because usually when Bitcoin doesn't have volatility, it tends to creep down. Because Bitcoin is a lot like your attention asset. People don't pay attention to it, so the volatility goes down and the price goes down.
Yeah.
And then once people start paying attention, volatility and price tend to be correlated together on the upward. What we're observing this summer is actually a divergence. Volatility is going down, but Bitcoin is still teetering on the edge of hitting 120 again and potentially higher into Q4. So that's been remarkable to see. I think it speaks to the fact that there is a floor and that institutional adoption is here, for which we've seen consistent demand for Bitcoin ETFs. This summer, we had the second highest source of flows in its history since inception in a way that isn't something you would associate with a summer cycle.
Okay.
So I think there's a lot to be excited about.
So you think it's going higher in 2025?
I do. This I feel more convicted in because Bitcoin is really simple to understand. At sometimes people, I think overcomplicate these things, but really assets move because there's a market and people buy it and people sell it and there's more demand and less supply. And we're entering into the period in which that trend is likely to be accentuated. There's really two reasons for it. One is the top-down global macro perspective, which everyone is expecting the rate cutting cycle to begin. And from a bottoms-up perspective, we have now seen tremendous capital raised for the purchase of Bitcoin by these institutional crypto asset treasury companies. Mm-hmm. And so I think Architect Partners recently put out something close to $90 billion has been put to work in Bitcoin and crypto assets since the beginning of this year. And in June alone, which is a month and a half, it's about half of that money that having been now earmarked for the purchase of Bitcoins once the merger consummations are approved for them to go live. And so there's a wall of money just waiting on the sideline. And guess what? These treasury companies are your most price inelastic buyer because their mandate is to go buy Bitcoin at whatever price. And when you see the overlapping forces of indiscriminate price buying and supply generally being constrained, and then on top of that, there's this dynamic where certain investors are playing this opportunity from a special sits perspective where they're short Bitcoin as a boxed relative value trade. That creates a really interesting dynamic where you have the chance to imagine a short squeeze while these Bitcoin treasury companies are unleashing the energy to come to market. So I'm very bullish, both from the macro and from the bottoms up of what's going on in the Bitcoin ecosystem.
Of course, not everyone sees this as positive. Critics warn of paper Bitcoin, comparing the rise of treasury vehicles and ETFs to the grayscale era, where financial engineering overshadowed real demand for the asset itself. But Park welcomes this tension. He argues that disagreement is healthy because it creates volatility, and volatility is what drives opportunity. The worst-case scenario, he says, is when everyone is on the same trade. That's when bubbles form and eventually burst. By contrast, today's debate between those embracing institutional Bitcoin treasuries and those warning against them creates a dynamic market where both sides can be proven right or wrong. That's where innovation thrives.
Competition always begets better opportunities for consumers. And so I'm excited for this moment. And I do think we're going to therefore see a flywheel of innovation come through. The thing that I'm noticing is that there is a barbell perspective about Bitcoin treasury companies. Some people are really interested and they're fascinated by it and they're embracing the movement. And then you see the other people who are just flat out opposing, aghast that's even happening, and reminds the cycle of grayscale and tries to draw parallels around why these kinds of leverage always end up badly.
Yeah, they're calling it paper Bitcoin summer. Have you heard that?
Yes. Oh man, am I familiar with those terms as someone who loves to also traffic in the options market. And the thing is, this is great. This is great news. This is really great news that there's such opinions because I've always shared the view that the most dramatic price action happens when these two forces collide. You need a lot of short interest that can be also then taken to the other side in ways where thesis can be proven or disproven. And that's what creates volatility. And volatility is ultimately a thing that retail investors really embrace in this opportunity of hyper-financialization. And so I would be more worried if everyone was aligned on the same trade, kind of actually like Grayscale. No one thought Grayscale would blow up. It was kind of one of those, everyone was touching it as if it was going to be the greatest arbitrage on earth and they couldn't imagine how it would blow up and everyone piled in on it. Not a lot of people raised their hands. Here, at least, there's an active dialogue. And I think that in itself is a pretty worthwhile thing. At the end of the day, financial engineering is one path of how to bring more Bitcoin per share, which is the predominant financial metric that investors are interested in. But really, the most intuitive way to think about increasing Bitcoin per share is actually just be more productive with your assets to get more Bitcoin per share. I think that is really intuitive, which is if you have a profitable operating business or you're able to actually do things with Bitcoin to generate yield and cash flow, and you then buy more Bitcoin with it, then you're getting more Bitcoin on a denominated dollar basis, which is good for investors. So I think we're going to start seeing a transition into some of those stories in a more authentic way. And people will be able to really open their eyes and see, oh yeah, this isn't just like financial alchemy. This actually is productivity being captured in an operating company wrapper that's not possible in the ETF wrapper. Bitcoin as a strategic asset versus a congressional mandate. And what we're seeing is the ability to have a conversation around the more important aspect of the congressional mandate by having opened the path by Trump's adoption of the executive order. But the truth is, executive orders are fallible. They can be turned by the next administration if the political views don't align, and they're not stable because you don't have the embedded mandate of the people. So I think the real use case will be that we first need to get a legislatively approved strategic reserve, which I think we're quite far from. And we know Senator Loomis has been a driving force for it, and she is working very hard to build coalition around it. But I think until that happens, the idea of an executive order strategic Bitcoin reserve purchasing Bitcoin is maybe not the most useful kind of permanent capital vehicle that we can imagine. And so if you are coming from that perspective, it's probably not like the most important sign to think about the totality of what the U.S. is doing with the dollar hegemony at risk. So, my view is it will be inevitable that governments will buy Bitcoin on their balance sheet. This is something I feel very strongly, but I do also think we have to be patient about it, where it is not likely a rogue decision. So the view that I've shared in the past with others is, because the US is one of many in its global alliance across the trading partnerships and the economic order, there is a social contract in which how we trade with countries like Japan, where the dollar serves as a role for the transfer of goods and capital. And in an ideal fashion, if you were to adopt Bitcoin as part of your treasury asset, it will make sense to me that you do it with some global coordination with your allies, because it would be a slight betrayal of that social contract if you were to stuff, let's say, Japan with all your long-dated treasury bonds and then didn't give them a heads up and just bought Bitcoin on your own, where the very kind of crisis confidence that would otherwise arise is one where they're not being attuned to. So the signs that I think I would wait for to see when a real strategic Bitcoin reserve adoption would happen would be some kinds of global partnership dialogues that are emerging. I think Japan is the one you should be paying attention to, because they have been so far the most kind of quiet around the role of Bitcoin as a developed market. But once you start seeing Japan embrace Bitcoin, then I do think we're ready for that dialogue to happen at the country level.
Perhaps the boldest part of Park's analysis is his outlook on governments adopting Bitcoin as a strategic reserve asset. He's clear. It's inevitable that governments will buy Bitcoin. But timing matters. Executive orders like those floated in the U.S. can be reversed by future administrations. For Bitcoin to become a true reserve asset, it needs legislative approval and ideally global coordination among allies. Imagine the U.S. suddenly buying billions in Bitcoin without warning Japan or other key partners. That would betray the trust embedded in the dollar-based global order. Instead, Park expects any move toward sovereign Bitcoin adoption will come through allied coordination, and he points to Japan as the country to watch. When Japan begins openly exploring Bitcoin as a strategic reserve, that's when we'll know the geopolitical era of Bitcoin has arrived.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.